A very good afternoon to all our grade 12 learners. Welcome to today's mathematical literacy lesson. My name is Mampani Kekana. This lesson is brought to you by Gauteng Department of Education in collaboration with the Sayibona Discovery Center. Boys and girls, as I have just greeted you, welcome to the subject mathematical literacy. This is the 4th year since the beginning of the term, and then just stay tuned and then you're going to enjoy the lesson. Today our focus will be on the topic finance, and then we're going to do a revision on VAT, UIF and income tax. I understand that the colleagues at school level have already covered these sections. So what we are going to do today is just to do a recap, do a revision, and consolidate whatever you have already covered. So, of course, it's very, very important that in each and every section, we need to know what we are going to learn about. And then we need to know what we're supposed to know by the end of that lesson or by the end of that section. Just the same as in this case, in terms of VAT, UIF, and income tax. In this case, we say at the end of this unit, in other words, at the end of this lesson, you should be able to determine terminologies under taxation. Terminologies, it means we are focusing on definitions. You must be able to explain what we mean by VAT, UIF, and income tax. You cannot be working with certain terminologies, or you cannot be working with certain concepts, but when they ask you to explain them, then you can explain them. So it's very important that every concept, every term that we are working with in the subject, you must be able to define it, you must be able to explain it. And the fortunate part about MathLead is we are not that strict in terms of the explanation or in terms of marking your own explanation. As long as your explanation, as long as your definition is relevant, then you should be able to get marks. Therefore, you are not supposed to memorize these definitions. You can still use your own words. You can still use your own understanding. As long as your own words or your own understanding are relevant, you should be able to get marks. So you should be able to define terminologies under taxation, which means VAT, UIF, and income tax. Remember, taxation in grade 12, we are referring to VAT, UIF, and income tax. I know that most of the learners, when they are in grade 12, when they think about or when they hear about the word taxation, they only think about income tax. That is why they find it very challenging. But when we talk about taxation in grade 12, we're talking about VAT, of which you did it in grade 10. And then we're talking about UIF, of which you did it in grade 11. And now we've got a new type of taxation in grade 12, which is income tax. So the other thing that is important is you must be able to calculate any activities about VAT. Any activities about VAT, any question about VAT, you must be able to calculate it. You must also be able to do any calculations about UIF. You must also be able to do any calculations about UIF. And then, of course, it's a new concept in grade 12. You must be able to calculate taxable income. Okay, we will come back later to this one, what we mean by taxable income. Calculate taxable income related activities or calculate taxable income related questions. And you must also be able to use tax tables to calculate income tax. You must be able to use tax tables to calculate income tax, For now, our focus will be on individuals. If there's any other tax table, the tax table will be similar to the one of individuals or personal tax. And then we must also be able to calculate medical aid tax credits. You must also be able to calculate medical tax credits. And you must also be able to calculate any calculations that are related to rebates. Determine, or you must be able to determine the relevant tax credits. Right. Terminologies, as I've indicated, I'm quickly going to run through most of the common terminologies that we encounter in taxation. Now, the first one is gross income. Now, boys and girls, you should know this one all the way from grade 10. If they ask you, or if the examiner has to ask you, or if your teacher at school level has to set a test, and then they say, define the term gross income, or explain what do you mean by, what do you understand by the word gross income? Then you just say, gross income is an income received before deductions. Okay, it's an income received before deductions. And then with regard to net income is an income received after deductions. Received after deductions. Please be careful about gross income and net income, because some of you are confusing the two. And then, of course, VAT. Define VAT. When we say define VAT, you are not going to say VAT is value added tax, because VAT is just an abbreviation of value added tax. But when they say explain what you understand by the word VAT, or what you understand by value added tax, and then you're going to say it's a tax that is charged on goods sold. Remember, when you go to a shop and buy an item, you'll find that VAT is added there. So we say it's a tax that is charged on goods sold or on service rendered. It's a tax charge on goods sold or on service rendered. Remember, if maybe, for instance, a plumber will come to your house, or an electrician will come to your house, and they have to repair something, and then after that they have to give you an invoice. You will see on the invoice or on the receipt, you will see the VAT. So there will be an indication that VAT has been charged. If you go to a shop and buy an item, you'll see on the till slip, they will indicate the VAT amount. That will be an indication that VAT has been charged. And then UIF. Again, if they ask you to explain what you understand by UIF, now you can't say it's unemployment insurance fund. UIF, again, is an abbreviation. It's just a shortened, the letters that are being used to shorten a certain explanation. Like if you say unemployment insurance fund, we can simply say UIF. It's like when we say South Africa, some of you might simply say SA, but we are talking about the same thing. So if you have to explain, they can say, if they say explain what you understand by SA, you can't say South Africa, because you are referring to the same thing. So you have to give a clear explanation. SA and South Africa are the same thing, but now the explanation will be the same. So in this case, if they say explain what UIF is, you can't say unemployment insurance fund, but you're going to say it's an insurance that gives a short relief. Okay, it's an insurance that gives a short relief to workers when they are unemployed, ill, or injured. A short relief simply means it makes life easier for you. Okay, it's just a temporary solution if you're going through difficulties in terms of money. So insurance that gives a short relief to workers when they are unemployed, ill, or injured. And then, of course, we've got annual income. You know what the word income is. Annual, annual refers to a year. So when we say annual income, we refer to the total income received over a year. Annual taxable income, we know annual, then taxable income, it refers to part of a gross income that must be taxed. Part of gross income. Now, gross income, remember, is the income before deduction. Now, part of that gross income must be taxed. So we say annual taxable income is part of gross income that must be taxed. And then, of course, we've got non-taxable income. Non-taxable income is part of gross income that must not be taxed. Part of gross income that must not be taxed. And then we've got income tax. Income tax is the tax amount that must be paid based on your taxable income, depending on how much you earn per annum. The amount, the tax that you must pay, that will depend on the taxable income. So income tax is the tax amount that must be paid based on your taxable income. A rebate is a tax relief based on a person's age. A tax relief based on a person's age. Now, when we relieve it, it means we make it less. Okay, we make it less. So it's tax relief. They make your tax amount to be less based on your age. And then we've got tax threshold, income level at which a person begins paying income tax. Tax threshold is an income level at which a person begins paying income tax. Now, boys and girls, we all know that most of the people or all the people who are working, they are not actually earning the same amount of money. Some people are earning way a lot of money. Some people are not earning a lot of money. So those people, some people who are not earning enough money, they are not paying tax. Okay, but if they are not paying tax, if the government will say you are not earning enough to pay tax, but how much is not enough, how much is not enough, so the government will decide. They might say any person who is earning 100,000 and more per year, that person will pay tax. But any person who's earning below 100,000 per year, that person is not going to pay tax. So it means that 100,000 is the amount that the government will use to determine whether one must pay tax or one must not pay tax. So that 100,000 will say it's a tax threshold. In other words, it's an amount where the government will determine whether this person will pay tax or not. So tax threshold is an income level at which a person begins paying income tax. We've got medical tax credits, tax relief. In other words, again, they reduce your tax. If you have to pay a certain amount of tax, they are going to reduce it only if you've got a medical aid. Medical tax credit is a tax relief based on a medical aid contribution. Now, boys and girls, this is just a summary of all the terminologies that you're supposed to know under taxation. And then again, we say this is not, in other words, when you give your own definition, it does not necessarily mean you have to write them exactly as they are. If you've got your own interpretation, if your teacher has indicated different definitions but that are similar to this one, and then you feel comfortable with that one, you are also welcome to stick to those definitions. But you will see that from these definitions, they must be relevant to what you have already learned in the classroom. Okay, then we're going to look at one of the types of taxation, which is VAT. Okay, what is VAT? I'm taking you back to the definition of VAT. We said VAT is the tax charged on goods sold or service rendered. Tax charged on goods sold and services rendered. Then we've got the VAT rate. We know that it's 15%. The VAT rate, in other words, the percentage that is charged on VAT is 15%, but that was only since the 1st of April 2018. Okay, this must be since 2018. So since 2018, the VAT percentage is 15%, but before the 1st of April 2018, the VAT rate was 14%. That is why in some cases, as you are busy doing your calculations based on VAT, in some cases you might see 14%. So, but remember, the 14% was actually before the 1st of April 2018. However, even though VAT is charged on the goods sold or service rendered, but there are certain items that are exempted. In other words, people are not supposed to be charged VAT on. Remember, maybe because of the high cost of living, people cannot afford, then they will say, but these are the basics, these are the daily needs of the people. So in other words, to make the cost less, let us not add VAT on these items. Like for instance, a brown bread, if you buy a brown bread, even if you go to a shop, you buy a brown bread and they give you a till slip, you see that on that till slip there won't be any VAT amount charged. If you buy a maize meal, okay, if you check your till slip, you'll see that if you have bought a maize meal, there isn't supposed to be any VAT that is being charged there. Milk, any vegetables, fruit, eggs, and other items that I'm not going to mention now because there's actually a lot of them. So those items are not um, charged VAT. So in other words, VAT is not being charged on those items. Okay, now very, very important. It's very important to know how to do the calculations that involve VAT. Then we say if you are given any amount that is excluding VAT. Now they say the cost of this item is 500 rand, and this 500 rand is excluding VAT. Then now the examiner would ask you to calculate the VAT amount. What are you going to do? You're going to multiply by 15%, or some of you will say 15 over 100, or some of you will say 0.15. So if they say the cost of this item is 500 rand and then it's excluding VAT, calculate the VAT amount. Then you just take that amount, you multiply it by 15%, or you multiply by 15 over 100. Then if you've got an amount, they say this amount is excluding VAT, or the cost of this item is 600 rand, but this 600 rand is excluding VAT. Calculate the amount including VAT. Now, if you have to calculate the amount including VAT, you're going to multiply by 115%. Some of you will say multiply by 115 over 100, or some of you will say multiply by 1.15. And then we've got the amount including VAT. Now here it's an item that cost 800 rand, and then they say this is including VAT. Now you want to know the VAT amount. Now you want to know how much do they charge for VAT, how much VAT is included in that amount. So from the amount including VAT to VAT amount, we multiply by 15 over 115. We multiply by 15 over 115. Then from an amount including VAT, now this item, the price of the item is including VAT. Then now we want to know what is the cost of this item excluding VAT. Then you're going to multiply by 100 times 115. You're going to multiply by 100 over 115. Or some of you will divide by 1.15. It depends on how your teacher has taught you. But you will see that all these calculations are actually relevant to what you have done in the classroom. Okay, then of course, the other type of taxation, we've got UIF. Then as we have indicated, we have discussed the terminology for UIF. What do we mean by UIF? In this case, we say, what is UIF? The UIF exists to provide short-term relief to workers when they become unemployed, are unable to work because of maternity leave or adoption leave or illness. Okay, you can see that this explanation is actually similar to the one that I started with. But what is important is the purpose of UIF is to provide a short-term relief to workers who becomes unemployed, or those who cannot work anymore, or those who lose their jobs. Right? And then the other thing that is important in this case is the UIF, they calculate 1% of the basic salary. So remember, this is an insurance. So if a person is working, that person must contribute to an insurance, because at the end of the day, when this person will no longer be able to work, that insurance must be able to pay this person. So on whatever amount this person will be earning, that person must contribute 1% of the basic salary. So 1% of the basic salary will be paid by the employee, and then 1% will be paid by the employer. So, and then at the end, they are going to have 2%. The total will be 2%. So UIF, it is calculated at 1% of the basic salary. Okay, and then who must pay this? Employee must contribute 1% of that basic salary. Employer must contribute 1% of the basic salary, and then in total is going to be 2% of that basic salary. So this 2% will now be paid into the state fund, okay, into the Department of Labor, so that later on, when this person can no longer be able to work, then they will be able to give that person something on monthly basis. But remember, it's not going to be for a long time. It might be for 6 months, it might be for 1 year. Okay, then again, they say there's a limit to the basic salary amount on which the 1% will be calculated. This is called a maximum ceiling. Okay, we know that some people are earning way a lot of money. Okay, if you are earning maybe 5,000, they'll say 1% of that 5,000. If you are earning 10,000 rand per month, they'll say 1%. But now let's think about somebody who's earning, let's say 200,000, okay, or somebody who's earning 100,000. What is 1% of that 100,000? It's going to be a lot of money. So the government said, but we need to come up with a limit. So in this case, they say, as from the 1st of June 2021, the maximum earning ceiling will be 17,712. So it means the 1% will be charged on any amount up until 17,712 per month. So for any person who's earning more than 17,712 rand per month, that person will only be charged up to 17,712. Let's say, for instance, the person would earn 20,000 rand per month. So that 20, it means they're not going to charge that person 1% of 20,000, but they're going to charge that, or that person is going to contribute only 1% of 17,712. If a person earns 25,000 rand per month, that person is not going to contribute 1% of that 25,000, but that person is going to contribute only 1% of 17,700. So 17,712 will be the maximum. Okay, then about income tax. We said income tax is charged on an annual income. That means an income that one receives over a year based on the tax rate tables issued by SARS. And then taxable income is the portion of the income that is taxed, or the part of the income that must be taxed. But how do we calculate the taxable income? So this one, taxable income, we calculate it by taking gross income, we subtract the non-taxable deductions. Non-taxable deductions. Remember, we spoke about non-taxable deductions. We said those are the amount that are not supposed to be taxed. So those ones we refer to the pension fund, we refer to the retirement annuity fund, UIF, donations. So if that person has got a pension fund in that income, the pension fund must be subtracted. Okay, the retirement annuity must also be subtracted. The UIF, the donations. But this one can only happen if these things are being mentioned. Okay, if they are not being mentioned, they will indicate taxable income. Now, taxable income simply means all those non-taxable deductions have been subtracted already. So this amount can be used to calculate tax. Now, taxable income, that is where we take the gross income and then we subtract the non-taxable deductions. Okay, this is the example of a tax table that we spoke about earlier. Every year, SARS has to revise this table. Okay, now you will see on this table, it shows that these are the tax rates from the 1st of March 2024 to the 28th of February 2025. So that means this is for the current financial year. The current financial year actually started on the 1st of March last year, which is 2024, up until the 28th of February this year. So by the end of this month, this table is going to be revised. But this is what is currently being used. Now, how do we interpret this? It says taxable income. So you see this one, it says taxable income. So it means anyone who is earning an amount from 1 rand to 237,100 per annum. Okay, I know there isn't anyone who's earning 1 rand or 2 rand or 10 rand per annum, but maybe let's say a person is earning 5,000, 6,000, 7,000. As long as that amount is from 1 rand to 237,000, or it's any amount that is not more than 237,100, that person will be charged only 18%. So if the person is earning 50,000 rand per annum, that person will be charged 18% of that 50,000 rand. If that person earns 100,000, that person will be charged 18%. Then those who are earning more, in this case, we say those who are earning 237,101, that means it's a little bit more than this. You are now earning more than this. It means your tax bracket is now going to change. You are earning this from 237,101 to 370,500. This is the formula that they are going to use to calculate your tax amount. The formula is 42,678 plus 26% of taxable income above 237,100. So this is just to give you a picture of what we mean by a tax table or a tax rate. You will understand it better, or I'm sure you understand it better when we do the calculations. Okay, now before we go to that tax table, let us quickly do a recap in terms of the calculations that are based on VAT. So this one is a typical exam questions. It was taken from June 2021. It was the final examination. No, it was a June question paper, supplementary question paper. So Hobby X offers workshops where they teach art skills. The information alongside shows the different workshops offered by Hobby X. All prices shown exclude VAT. Now this part is very, very important, because once they say all prices shown exclude 15% VAT, then you must have an idea of how are you going to approach your question, or how are you going to answer this question, because already they are telling you that whatever price is indicated there, it's excluding VAT. Then the first 10 participants in each of the workshops receive 7.5% discount. Use the information given to answer the questions that follow. Determine the VAT amount charged for the creative journaling workshop. Determine the VAT amount charged. Now they want you to calculate the VAT amount charged from an amount excluding VAT. Now if we look at the amount for creative journaling, it's 275 rand. So if it's 275 rand, then 275 rand, we know that this is excluding VAT. Okay, now the question is, how do you calculate a VAT amount from an amount which is excluding VAT? Okay, now if you remember what we discussed earlier, or if you remember what we have already discussed in your class, you will know that in this case we must take 275 rand and then we multiply by 15 over 100, or some of you can just say 275 rand multiplied by 15%. Now if you take your calculator, then you say 275 multiplied by 15 divided by 100, I'm getting 41.25. So this is equals to 41 rand and 25 cents. Simple as that. What you needed to understand in this case is the amount that is given, it's actually excluding VAT. So you only needed to calculate the VAT amount. Right. Then the next question is, calculate including VAT the total cost for a person attending all workshops. Okay. 1.2, calculate including VAT the total cost for a person attending all the workshops. So how many workshops are here? So there's 1, 2, 3, 4, 5, 6 workshops. So if a person has to attend all the workshops, the person will have to pay the total amount. Okay, but the total amount that are indicated here are actually excluding VAT. Right. So the first one is 330 rand. So it's 330 rand. We just need to add, and then we say plus. The next one is 220 rand. Okay. The next one is 110 rand, and then plus 165 rand, plus 220 rand, plus 275 rand. Okay. So if a person has to attend all these workshops, so it simply means the person must pay the total amount. So if I add everything together, okay, 330 rand plus 220 rand plus 110 rand plus 165 plus 220 plus 275. So the total is 1,320 rand. Okay, I hope you are also using your own calculator just to confirm if my answer is correct. So the total is 1,320 rand, but all these costs are excluding VAT, but the question says including VAT. How do we calculate an amount from excluding VAT to an including VAT? Okay, you should know it now. You should know that percentage. Okay, we are using 15%, so this one is 1,320 rand. We multiply by what? We multiply by 115 over 100, or we multiply by 1,15. So it's 100, and some of you might just say 1,320 rand multiplied by 115%. You press the percentage key on your calculator, or you say 115, sorry, out of 100, or you say 1,15. But in the end, the answer will be the same. So 1,320 multiplied by 115 divided by 100. Then I get 1,518. So now this is the total cost including VAT. Very, very important. Okay, then the next question is a typical exam question taken from Western Cape, September 2024. Now, boys and girls, you can see that now you just have to imagine if you were writing the prelim paper, the Western Cape paper in 2024, where you would you be able to answer this question? But you can see how easy these questions are. And this is how we prepare ourselves for the examination. Now, this one says, Mr. Van Wyk decides to buy a new laptop. He searches for options online and decides to buy the following model. Use the information alongside to answer the questions that follow. Calculate the price of the laptop excluding VAT. Okay. Calculate the price of the laptop excluding VAT. Now we have to check the information that is given here. It's the price is 9,499. The price is 9,499. But it's very important that whenever you are given an information, you read everything that is indicated there. Especially in some cases where you are given hidden information or the information is in small prints. Like in this case, they say, please note, the selling price is VAT inclusive. The selling price is VAT inclusive. VAT inclusive simply means it's including VAT. It's including VAT. So this price is including VAT. This is including VAT. But the examiner is looking for the price excluding VAT. Let's write down the price. The price is 9,499 rand. And then think about this. How do we calculate an amount from including VAT to excluding VAT? From including VAT to excluding VAT. You should know that. And then we multiply by 100 over 115. Or you divide by 1,15. So 9,499 multiplied by 100, then divided by multiply by 100 over 115. So if I take my calculator, please check with your calculator as well. 9,499 multiply by 100 and then divide by 115. I'm getting 8,260. 8,260 rand. Now this is the price of the laptop excluding VAT. The next question, which is related to VAT as well. This one was taken from, again, September 2024, Northern Cape. Load shedding is it's a reality in South Africa. Load shedding is a reality in South Africa. Mr. Johnson decides to invest in solar panels. Given alongside is an advertisement for the solar system he intends to buy. Use the information alongside to answer the questions that follow. Calculate the VAT amount included. Calculate the VAT amount included. So you need to get all these wordings correct so that you don't confuse them. You need to know that when you are given this is what you must do. When you are given an amount including VAT and you have to calculate an amount excluding VAT, this is what you must do. So it's very important to get all those calculations correct, or all those wordings correct, so that at the end of the day you do the correct calculations. Now calculate the VAT amount included in the cash price. So if you read the information, the cash price, there's the cash price is 224,660, but they say this is including 15% VAT, or this is just including VAT, which is 15%. So what do you do in this case? Let us first write down the amount, 224,660. Then from an amount including VAT to VAT amount. From an amount including VAT to VAT amount, we multiply by 15 over 115. Okay, we multiply by 15 over 115. So then from there, we use our calculator, 224,660, and then we multiply by 15 over 115. So the VAT amount in this case is 29,303 rand and 48 cents if I round it off correctly to 2 decimal places. Now, boys and girls, I hope so far so good in terms of these questions about calculating VAT. You must be able to master this. At least I'm sure in the examination you'll be able to find one of this type of questions. Okay, then the next one is about UIF. Okay, Mr. A. Johnson receives his salary slip below. Study his salary slip to answer the questions that follow. 4.1, what does the abbreviation UIF stand for? Can you see how easy these questions are? These questions are very, very easy. So this is one of those questions, or some of those questions where you cannot afford to lose marks. It's very, very easy. UIF stand for unemployment insurance fund. Okay, unemployment insurance fund. Now, boys and girls, in terms of the abbreviations, the expansions of the abbreviation, they are very strict. So every word must actually be correct there. It must be unemployment insurance fund exactly as is. So you need to know that UIF stand for unemployment insurance fund, because some learners will find that they write unemployment interest fund and so on and so on, because they cannot actually remember. But it's very important that you remember every single word there. Okay, so the next question is, it's again on the very same, about the same salary slip. Mr. A. Johnson receives his salary slip below. Study his salary slip to answer the questions that follow. The next question is, calculate the UIF, the missing value A, on Mr. Johnson's salary. So in this case, it means now they need to deduct the UIF. How much must be deducted? Okay, what amount of UIF must be deducted there? So we know that Mr. Johnson's is an employee, so therefore they must deduct 1%. 1% will reflect on his salary slip. Then we just say 1% of 12,790, okay, is 1% of 12,790, which is a basic salary. So we say equals to 1 over 100 multiplied by 12,790. So just to be sure about our answers, let us always use a calculator. 1 divided by 100 multiplied by 12,790. Then I get 127. On my calculator, I get 127,9. But because we know that this is the value of money should be written with 2 decimal digits. Okay, 127 rand and 90 cents. So this is 1%. 1% is the same as 1 over 100 multiplied by 12,790. And that is the answer for number 4.2. Right, then the next question, it's a copy of Susan's salary slip is shown alongside. Study the salary slip and answer the following questions. The first question is, explain the difference between gross salary and net salary. Net salary. Explain the difference between gross salary and net salary. Boys and girls, we have already discussed this. Okay, this is something that you should know. Now you have to write down gross salary, okay, gross salary, you can say it is the salary received before deductions. Okay, is the salary received before deductions. And then of course we've got net salary, okay, which is the salary received after deductions. Okay, so you need to check here, because obviously when we say gross salary, let's say you see an advert or you find a job and then they say this is how much we're going to pay you, this is how much we're going to pay, we're going to give you, like for instance, 10,000 rand per month. Then you need to check if indeed that 10,000 rand is the same amount that is going to be deposited into your account every month, or is there still something that they're going to deduct there. Okay, because in some cases they will say we need to deduct something, and then therefore that cannot be the amount that you will receive into account. So net salary usually is the amount of the salary that will be deposited into an account. So it's a net salary. So gross salary is what you see, is what they tell you that this is how much we're going to give you every month. But maybe in some cases we're going to subtract something. Okay, so gross salary is the salary received before deductions, and then the net salary is the salary received after deductions. Just make it easier for yourself. You don't have to make it very long. Okay, then the next question, still based on the very same salary slip, says calculate Susan's monthly gross salary if her annual gross salary is 81,000. Calculate Susan's monthly gross salary, okay, if her annual gross salary is 81,000. So now we need to underline this. Annual means over a year. Okay, so if this person earned 81,000 rand per year, which is what annual means, then how much does this person earn per month? So how many months are there in a year? So we say 81,000, then we divide it by 12. Okay, 81,000 divided by 12, and then we say on your calculator 81,000 divided by 12, then we get exactly 6,750. 6,750. So this person, or Susan, earns 6,750 rand per month. That is the gross or the monthly gross salary of 6,750 rand. Okay, then still on the very same question, it's the employee UIF contribution is calculated at 1% of the gross monthly salary. Okay, the employee UIF contribution is calculated at 1% of the monthly gross salary. Calculate the amount that will be deducted from a monthly salary for UIF. Okay, remember, colleague, boys and girls, at the beginning we indicated that it must be 1% of the basic salary. Okay, it must be 1% of the basic salary, because now in this case the examiner has mentioned that it is 1% of the gross monthly salary. So if the examiner has mentioned it in this way, it means we must take the 1% of that gross monthly salary, but it is actually 1% of the basic salary. Because remember, if we say a gross monthly salary, a person will have a basic salary. Let's say, for instance, you are working for a certain company, and then they'll say you're going to earn 10,000 rand as your basic, and then maybe a commission. Okay, so obviously your commission will differ from month to month. So your basic plus your commission will give you a gross salary. So actually, when they calculate UIF, they are always going to use your basic salary. Okay, the standard amount that you are going to earn every month. So if you get a commission of 3,000 rand, it means for that month you're going to get 13,000 rand. For another month, you get a commission of 4,000 rand, you're going to get a gross salary of 14,000 rand. But when we calculate UIF, we actually use the basic salary. But now in this case, because the examiner has indicated the gross monthly salary, we have to use that gross monthly salary. Okay, so it's going to say 1%. Now 1% obviously is the same as 1 over 100. Then we multiply by, okay, we multiply by, do we have the gross salary in this case? No, it's not indicated. So if we look at the information, is the basic salary, we've got UIF, it's 1%, and then it's 1% of the gross earnings. The gross earnings is not indicated. Okay, so okay, the gross salary, remember, it was 81,000 from the previous question, 5.2, so it's what, 81,000. So we say 1% is 1 over 100 multiplied by 81,000. Calculate the amount that will be deducted from a monthly salary for UIF. So boys and girls, this one we have to use the monthly. We said it's 1 over 100. We multiply by, if you look at the previous one, we said is 6,750, the monthly. We're not going to use the annual one, we use the monthly one. So the monthly one we said is 6,750 rand. So if we go back to our question, we'll say 1 over, then is 6,750. Okay, then from the 6,750, we say 1 divided by 100 multiply by 6,750, and then we get 67,5, but we write it as 67 rand and 50. Okay, we had to calculate the 1% of the gross monthly salary. Okay, then the next question. Okay, so let us now go back, because remember, before we started with the VAT and the UIF, the last part that I explained was about the tax table. Okay, so now we are going back to the type of questions that they can ask under the tax table or the tax rates. I have already explained the meaning of the tax table, that in this case, for any person who earns a taxable income from 1 rand to 237 rand and to 237,100, that person will pay 18%. Okay, and then for this amount, the formula is given on the right hand side, and so on. So it means you must be able to interpret this table whenever questions are asked. So that is exactly what we are going to look at now. Now let us look at this example where they say into which tax bracket. Now tax bracket, they are referring to the taxable income. These are the brackets. They say 1 rand to 237 rand. I'm sorry, 237,100. Usually they will indicate that is bracket number 1, 2, 3, 4. Sometimes they will say A, B, C, D, E. But in this case, because they are not labeled, we just take this as our tax bracket. This is the tax bracket for 1 rand to 237,100. This is the tax bracket for 237,101 rand to 370,500. This is the tax bracket 370,501 rand to 512,800. So this one they say into which tax bracket does a person who earns a taxable income. Taxable income is now the amount that must be used to calculate tax of 329,456. Now where do we find 329,456? If you look at the first one, it's from 1 to 237,000. That amount, it's not in that category. It's not in that bracket. Then we go to the next one. This one says 237,101 to 370. Now 329,456, it's not bigger than 370,500. So it means this amount, it's actually between these two values. In other words, it's under this tax bracket. So in this case, the tax bracket will be 237,101 to 370,500. Okay, so the tax bracket is from 237,101 rand to 370,500 rand. If I was an examiner in this case, I would still give a mark for someone who will say tax bracket number 2, because it means you will be counting the tax brackets. Tax bracket number 1, 2, 3, 4, 5. Then you will just say tax bracket number 2, even though the numbers are not indicated there. So this is how you answer it. It's just an example. Then a similar question, it says, into which tax bracket does a person who earns taxable 12,000 rand per month fall? Okay, 12,000 rand per month fall. Now we need to be careful, boys and girls, because in most cases, okay, remember I'm not saying always, but in most cases, the tax tables or the tax rates are given with the annual amount, with the amount for the whole year. So if you are given a monthly amount, it means that monthly amount must be converted to annual. If a person earns 12,500 per month, how much is that over 12 months? Or how much is that per annum? Which in this case, we assume that per annum, it means it's full 12 months. So in this case, we take 12,500. So let me write it here, 12,500. Then I multiply it by 12. Then I check 12,500 multiplied by 12. It gives me 150,000. Okay, 12,500 multiplied by 12, it gives me 150,000 rand. 150,000. Okay, now if I check for 150,000, where does it fall? I can confirm that indeed it falls in tax bracket number 1, because 150,000, it's not more than 237,100. So that will be tax bracket number 1, or you can say the 1 rand to 237,100. Okay, so that is but the first thing that we had to do in this case was to confirm the annual income or taxable income. the annual taxable income is 12,500 multiplied by 12, which is 150,000. Okay, but one would say it will still give you the same answer even if someone had to look at 12,500, but you'll never know. It's always very important that you confirm. Okay, in some cases it might be a different value. It might look like if you take this amount, you multiply by 12, it will still give you tax bracket number 1, but you always need to multiply it by 12 for you to confirm it, because in some cases it might lead you to a different tax bracket. Okay, then we also spoke about the tax rebates. The tax rebates. Now, what do we understand by the word tax rebates? It's a special relief discount given to taxpayers. Okay, remember, in some cases you find that some people are not actually earning enough, so after calculating their tax income or the tax amount that they have to pay, the government might feel like, you know what, these people are not actually earning enough money, so let us reduce their tax. So that is what we call tax rebates. It's a special relief discount given to taxpayers. Usually this must be, it is subtracted after the income tax has been calculated. That's why I'm saying they will calculate how much you're supposed to pay, and then after that they look at it, they say, okay, because of maybe of your age and so on, they'll say, okay, let us reduce this person tax amount further. So they'll be using the tax rebates. They say every person qualifies for primary rebate. So every person who is working actually qualifies a primary rebate. Okay, older people are granted additional rebate, and that is, if you are older than 65 years of age, you will receive primary and secondary rebate. And if you are over 75 years, you will receive primary, secondary, and tertiary rebate. Okay, you can see here when we look at the ages, we're actually talking about the senior citizens. These are old people, and in most cases they are not earning enough. Even if they are on pension, you'll find that their salaries or their incomes have been decreased significantly. So uh, for them, for being on pension, you will find that they are no longer earning enough money. So after calculating tax, the government will see that, but if we have to tax these people this amount, they are not going to have enough money to survive. So we rather reduce their tax further, or reduce their income tax, so that at least they are left with something. Now, to get a clear picture in this case, what does this mean? For a tax rebate type, say any person who is below the age of 65. So remember, these are the people who still qualify to work. So we know that actually the retirement age in South Africa is 60, but you find that there are still some people who are working up until the age of 64, and then at the age of 65 the system must kick them out, okay, or the system will kick them out. So in this case they say, if you are below the age of 65, in 2021, remember I said the tax table is being revised every year. In 2021, they will say, after calculating your tax, your annual tax, the amount that they're supposed to tax you over a year. And then after that, they look at it, they say, okay, if you are below the age of 65, we are going to reduce it by 14,958. So let's say they do the calculations and they see that this person is supposed to pay a tax amount of 20,000 or 25,000 per year. But because you are below the age of 65, let's say, let us reduce it by 15,000. In 2022, they would reduce it by 15,714. Okay, we've got secondary rebate. This one is for 65 to 74. Any person from the age of 65 to 74, they will say, okay, we do the calculations, and then after doing the calculations, you're supposed to pay a tax of 30,000 rand per year. Okay, then they'll say, okay, but now let us reduce this, because we can see that if we have to tax you this amount, you won't actually have enough money to survive. So they are going to reduce the tax. But if you are 65 to 74, they are going to reduce it twice. They are going to subtract the 14,958 and they are also going to subtract 8,199. Okay, and then if you are 75 years and older, they are going to reduce it 3 times. If you were supposed to pay 30,000 and you are now 75 and older, they are going to reduce it. In other words, they are going to subtract 14,958 and they subtract 8,199 and they subtract 2,736, and then you will see that they are now not going to tax you a lot, or they are now not going to tax these people a lot of money. They're going to tax them a small amount of money. But in 2022, if you are below the age of 65, they would only reduce your tax by 15,714 rand. If you would be from the age of 65 to 74, they would reduce it by primary and secondary. In other words, they will reduce it by 15,714 rand and also by 8,613 rand. If you are at the age of 75 and above, and then they will reduce it further by 2,871. In other words, if you are below 65, they only subtract primary. If you are 65 to 74, they subtract primary and secondary. If you are 75 and older, they subtract primary, secondary, and tertiary. You need to get it right, because most of the learners are making a mistake of saying if it's secondary, or if you are 65 to 74, then they only subtract secondary. Or if you are 75 and older, and then they only subtract 2,736. But if you're 75 and older, we subtract the 3 of them. If you're 65 to 74, we subtract 2 of them. If you are below the age of 65, we subtract only the primary. So you need to get it right, boys and girls. Okay, these are the examples in terms of tax rebates. Now the tax rebate, the 2021, 2022, you must always be careful. In some cases, they might give you the one for 3 years. So they might give you like 2023, 24, 24, and 2025. So you always need to be sure that you choose the correct one. Example, what tax rebate will a 45-year-old pension receive for 2022 tax year? Okay, what tax rebate? So a 45-year-old will receive only a primary rebate. Now, primary rebate in this case, why do we say primary rebate? Because 45, the person is below the age of 65. But they say in 2022, which one? So the person is going to be, what tax rebate will a 45-year-old pension receive for 2022? So the person will receive a tax rebate of primary rebate, or you can write the amount and say 15,714 rand. So it's a primary rebate of 15,714 rand. Okay, then example 2, it says, what tax rebate will a 78-year-old pension receive for the 2021 tax year? 78-year-old person. Now we go to our ages. We can see that this one is 65 to 72. So 75 is tertiary. So 75 and older. So this person will receive a primary, the 3 of them, remember, plus secondary, and then plus tertiary. All 3 of them. Then we indicate the amount. This one is for 2021. Make sure that you choose the correct one, 2021. So it's going to be 14,958 rand plus 8,199 rand plus 2,736 rand. Then you add them together. 14,958 plus 8,199 plus 2,736 rand. So it's 14,958 rand plus, we made a mistake of saying multiply, so it must be plus. So 14,958 rand plus 8,199 rand plus 2,736 rand. So I get 25,893. So it means this person's income tax will be reduced by 25,893 rand. Now, tax threshold. We also spoke about tax threshold at the beginning of this lesson, that of course we've got people working, but not all people are earning a lot of money. Some people are not earning enough money. Okay, so the government in some cases will decide that all those people who are not earning enough, you are not going to pay tax. But then I also ask how much is enough or how much is less. So the government will decide. Some case they might say 150,000 rand and more, you are earning enough. 150,000 rand and more per annum or per year, they'll say you are definitely going to pay tax. But if you are earning below 150,000, they might say 150,000 per annum, it's not enough. So therefore, let us not tax these people. So, like I indicated, tax threshold specifies the minimum income that a person can earn before being liable to pay tax. Okay, that is the minimum that a person must start paying tax. If taxable income is higher than the tax threshold, an employee must pay tax on it. So it's 150,000. If you are any more than that 150,000, I'm just giving an example, you're going to pay tax. But if you are earning less, then you're not going to pay tax. That is what they mean here. They say if taxable income is higher than the tax threshold, an employee must pay tax on it. But if taxable income is lower than the tax threshold, an employee will not pay tax. These are the examples. If you look at this one, they say if you are under the age of 65, any age, maybe you're 20 years, 23 years, 24 years, and then you are earning 87 or below 87,300, and just 87,300. This was in 2022. Any person who was earning less than 87,300 rand in 2022, and then that person was below the age of 65, that person did not pay tax or did not contribute to tax. And then in 2021, it was 83,100. Any person who was earning below 83,100, that person did not pay tax. But any person who was earning 83,100 and above, and that person was the age of 65 and below the age of 65, then that person paid tax. Then for 65 to 74, they say if the person was 65 to 74 in 2022, if that person earned 135,150 and more, that person qualified to pay tax. But any amount below, that person qualified not to pay tax, and so on. 75 and older, the tax threshold was 151,100. Any person who was at the age of 75 and above, 75 and older, and that person was earning below 151,100, that person did not pay tax. But if the person earned 151,100 and above, that person contributed to tax. So that is how the tax threshold works. Okay, so this is an example, a question about the tax threshold. It says, how old do you have to be to qualify for 128,650 tax threshold for 2021 tax year? How old do you have to be to qualify for 128,000? So now this is 128,650 in 2021. So in this case, it was 65 years to 74 years. So any age from 65 years to 74 years. Okay, so this is 65 years to 74 years. And then we've got the next one, medical tax credits. You need to understand what we mean by medical tax credits. even though we discussed it earlier, but we can still discuss it in detail here. So medical tax credit, which is deducted from the tax amount due, it is an additional rebate. Rebate, it means they are now going to reduce your tax. It is an additional rebate for taxpayers that are also members of medical aid. The tables reflect monthly credit. So for those people who are having medical aid, okay, and then they are taxing you on your salary, just because you've got your own, remember, if you've got a medical aid, should you get ill or should you get injured, you'll be able to pay your own fees at the hospital. So you don't necessarily become a liability to the state. But for those people who don't have medical aid, usually when they get hospitalized, you'll find that they don't actually have money to pay. So, but somebody must pay for those fees, which is the government. So it means if you don't have medical aid, should you get ill, should you get injured, it means you're going to become the responsibility of the state. The state or the government must pay for those medical expenses. But somebody who's got a medical aid, that person can go to a private hospital, or that person can still go to a state hospital, or that person can still go to a private doctor and so on. But those people will be able to pay for their own medical expenses. So just because they can be able to pay for their own medical expenses, the government will say, we are going to reduce your tax amount further. Okay, in other words, we are going to reduce your tax amount more. We're going to reduce it more. So in other words, you are not going to pay a lot of tax because we are going to reduce it. Then they say, by how much are they going to reduce it? Okay, so medical aid monthly tax credit. So it means if you are the only member in that medical aid, they are going to reduce it by 310 rand. If you were supposed to pay, let's say, 800 rand or 1000 rand or 2000 per month, then they're going to reduce it by 300 rand. Remember, we spoke about the rebate based on your age. Now, this one we're talking about a rebate based on medical aid, just because you've got a medical aid. So then, if you've got, or your medical aid covers yourself and also has a first dependent. A first dependent, it means it can be your child, it can be your spouse or your partner, then they're going to reduce it further by 310 rand. So in other words, it's going to be 310 rand for yourself, and then plus 310 rand for any additional member. The first dependent, it's usually your spouse or usually it's your child. And then of course the second dependent, if it's you and your husband, or if it's you and your wife, and then your child, then your child will be the second dependent, and so on. But order does not matter there. If you've got three people, so it means three amounts are going to be subtracted there. We're going to be subtract 310 for the first person, 310 for the second person, 209 rand for the second person, the second dependent, or the third person. And then the third dependent is 209. So medical tax credits or medical tax credits is just a rebate that the government will add on your tax amount. Okay. Now, typical exam question with regard to the tax table or the tax rate. Let us look at this. It's a 45-year-old Alfred who is employed at one of the manufacturing companies earns a taxable income of 388,450. So this person earns 388,450. That is a taxable income. Taxable income, remember, it's an income that will be used, or that must be used to calculate tax amount that this person must pay. They say he contributes monthly to a medical aid scheme. So by contributing, by having a medical aid, it means they are going to reduce his tax amount, okay, by medical tax credit as indicated. Okay, he contributes monthly to a medical aid scheme for himself and his two dependents. In other words, there are three of them on the medical aid. It's Mr. Alfred himself plus his two dependents. The two dependents might be wife and a child, but it does not matter. What we know is it's himself and other two dependents. Use tables alongside to answer the question that follows. 6.1. Write down the tax rebate that Alfred qualifies for. Okay. Write down the tax rebate that Alfred qualifies for. So in this case, the tax rebate, as indicated, these are the tax rebates that are indicated. Okay, they've specified that these are the tax rebates. Write down the tax rebate that Alfred qualifies for. Alfred is 45-year-old, and then if we look at the tax rebate, they say primary. Okay, even though they didn't indicate, they say 16,425 rand. But secondary is any persons of 65 and older. So it means primary, even though it's not indicated, is going to be below 65 years. So Alfred is below 65 years, so he qualifies for primary rebate. So he qualifies for primary rebate, which is 16,425 rand. Sorry. So Alfred qualifies for primary rebate, which is 16,425 rand. Okay, then the next question. Still on the very same information, they say, show with calculations that Alfred will receive 11,136 rand. Show with calculations that Alfred will receive 11,136 rand in medical tax credits for the 2022-2023 year. Tax year. Okay, so now medical tax credits, these are the medical tax credits. Medical tax credits. So this one we have to show if Alfred will receive 11,136. That is for the whole year. Okay, now how do we calculate it? How many people are on medical aid or are on this medical aid? There are 3 of them because it's himself and 2 dependents. So the first one, it's himself, is going to pay 347 rand. And then the other 2 dependents, that will be the first additional dependent, also 347 rand. But the third, or they say each additional dependent, so each additional dependent is 234 rand. And remember, this is per month. So if I add this 347 rand plus 347 rand plus 234, you can say 347 multiplied by 2. So 347 plus 347 plus 347 plus 234. Then I get 928 rand. Okay. So, but the medical tax credits are actually for the whole year. So this is per month. So this is per month. So we can say therefore per annum will be 928 rand multiplied by 12. So if you take 928 rand, you multiply by 12. Indeed, I'm getting 11,136 rand. There are only 3 people there. 347 for the main member, which is Alfred. 347 rand for the first additional, and then for each additional dependent is 234. If I add them together, I get 928 rand per month, and then I multiply by 12, I get 11,136 rand. So that is the answer for number 6.2. Let's see the next question. The next question is calculate the amount of tax Alfred must pay for 2022-2023 year. Okay. Calculate the amount of tax Alfred must pay for 2022-2023 tax year. Okay, now we have to look at the following. Alfred earns 388,450. Is taxable income. This is taxable income. Now we have to check under which tax bracket does this amount fall. So tax bracket, you can see that obviously it's not in the first one, and then it's not in the second one because 388 is bigger than 353. And then we go to this one, it's 353,101 to 488. So 388, obviously it's not bigger than 488. So it means this will be in tax bracket number 3 if you number them. It's 1, 2, 3. Okay, so there's number 3. Now we have to indicate the following. We say tax amount. Okay, tax amount before rebate and medical tax credits. Okay, so we are going to calculate the annual tax amount before rebate and tax credits. Okay, we've got the rebate. Already we calculated the rebate at number 6.1. We calculated the medical tax credits at number 2, but in the end we'll have to subtract them. So we have actually made, or the questions, the order of the questions have actually made life easier for ourselves because some of the things we have already done them. So what do we say here? Our formula, the formula that we are going to use is this one. 73,726. 73,726. Then we say plus 31%. Oh, now this is where most of you are having a problem. This is where most of you are struggling with. Now we need to understand this part. They say 31% of taxable income above 353,100. When they say above, okay, when we say above, it means 388,450. It's more than that amount by how much? Okay, if I've got 2 and then I've got 5, and then I want to know 5 is more than 2 or 5 is above 2 by how much? How do I get that? I'll say 5 minus 2. Okay, so it means in this case 388,450, it's above 353,100 by how much? That is where we subtract. We say, right, 388,100 minus 353,100. Okay, and this is how we interpret the amount above. The amount above, it means now you have to calculate the difference of the amount that is given of the taxable income and the amount that is given there. So we've got 388,100 minus 353. It must be 388,100. This one is not 100, but it's 450. Sorry, 450. The amount that is given there is 450. So it's 7326 plus 31% off, and then in brackets, the amount given is 388,450. 388,450 minus 353,100. Then I can simplify step by step. Okay, it's very important to do everything step by step. So I say 31% off. So now I calculate the difference. Inside the bracket, I've got 388,450. Then I subtract 353,100. So this gives me 350. Okay, 35,350 rand. So I've got 73,726 rand plus 31% of 35,350. Again, step by step, 73,726 plus. Okay, I know some of you will change 31% to 0.31 and so on, or you'll say 31 over 100, doesn't matter. In this case, we calculate 31%. So if I say 31% of 35,350. So 31%, so it's 31 over 100. I get 0.31. Then I multiply by 35,350. Then I get 10,958 and 50. So it's 10,958 rand and 58 cents. Then I add them together. If I add them together, I say 73,726 rand plus 10,958 rand and 50 cent plus 73,726, and then I get 84,000. So I'm going to write it there so that you can clearly see it on the screen. 84,684 rand and 50 cents. Okay, 84,684 rand and 50 cents. Remember, this is before rebate and medical tax credit. So if I have to do this, okay, I will say after rebate plus tax credits. I'm sorry about the space there. I'm just going to subtract. After rebate and tax credit, I say 84,684 rand. Then I subtract. How much must I subtract here? I must subtract 16,425, and then also subtract the medical tax credits, of which we said is 11,136. Okay, so it's 11,136. Let me confirm. Yes, 11,136. So I only subtract that. I subtract the rebate and I subtract the medical tax credit. So the final answer will be 16,425 minus 11,136. So in the end, I get 57,123 rand and 50 cents. And that's it. That is how we calculate it. Remember, the first thing that we had to do was to determine the tax bracket. So in this case, we said the tax bracket is tax bracket number 3, right? And then after identifying the tax bracket, we now need to check the formula. So our formula on the right hand side is 73,000. We need to write it down. 73,726 rand plus 31% of taxable income above 353,100. It's very important. You need to write it down. You know, in the examination, you can actually get a lot of marks, okay, by just writing down some of the things. So in this case, 73,000, you write it down. That will be an indication that you know which formula to use. And then after that, you do the substitution, especially check. You need to understand that part that says income above or the amount above. Then that is where we do the substitution, and that is where we subtract. And then we do the calculation. And then this person was supposed to pay 84,684 rand and 50 cents. That is of tax. But the government felt that this is too much. Let us reduce the tax. So they reduce, they mean the tax rebates. That is where they use the tax rebates. The first one is a rebate based on this person's age. Just because this person is below the age of 65, they reduce the tax by 16,425 rand. Okay. Then they have to reduce it further just because this person has got a medical aid. So the government will feel like if that person, if this person could get ill or get injured and so on, this person will be able to pay his medical expenses. So they reduced the tax further by 11,136 rand. So that is why in the end, the person will pay 57,123 rand, which is way less than what you are supposed to pay because of 84,000. So if maybe he was above the age of 65, okay, let's say if this person was 66 years old, it means they were going to reduce it further by 9,000. They were going to reduce it by 16,000 and also reduce it by 9,000. Okay, so that is why, or that is how in the end we have to subtract. But in most cases, if they don't mention all those things, if they don't mention the primary, the secondary, the medical tax credit, it means we're going to end up there. Okay, okay. So boys and girls, obviously, I mean, unfortunately, because of time, we will not be able to do more of these activities. Okay, but I think um, my colleagues at school level probably they did a lot of this, and I think my colleagues will be coming after me. Maybe they're going to do a couple of this with you next time so that maybe you can get a clear picture. But again, this is not something that you need to stress about. It's not something to stress about. It looks complicated, but you don't need to stress about because it is not the whole examination. Okay, so unfortunately, that will bring us to the end of today's lesson. Thank you very much for watching, and I hope to see you next time. Goodbye.